Hi, I'm Robert Maltbie. This is Maltbie's Minute on the Market, March 2025. The cold shower. How Doge and Trump's trade tariffs are rewiring the economy. Ladies and gentlemen, today we're witnessing an economic shift that the press refuses to acknowledge, where they are sharpening their knives, warning of gloom, inflation, stagflation, economic collapse. They cite the Tax Foundation's estimate of Trump's tariffs that could reduce GDP by 0.40% and warn of a potential 0.60% inflation impact. This is a recipe for stagflation. But what they fail to mention is the cold shower effect, a short-term discomfort that yields long-term benefits. And I believe we're seeing that now in the market. This is not just about tariffs. This is about economic realignment, capital efficiency, and long-due correction in government waste. It's about how the combination of Trump's trade war and Doge cost-cutting initiative is setting the stage for stronger economic growth, a revitalized stock market, and sustained stronger economies ahead. Let's break it down. We've heard the complaints about tariffs, but here's the truth. America holds the dominant economic position. The rest of the world needs access to U.S. consumers more than we need access to their goods. Foreign investment is shifting into the U.S. to bypass these tariffs. The result is a massive capital influx into U.S. industries. Global markets are already adjusting to this reality. Let's look at capital flows, how they've shifted in 2025. The S&P 500 is lagged, but is undervalued long-term for its growth, which we'll get to. EFA ETF, the International Developed Markets ETF, capital is shifting abroad temporarily. The IEV, European equities, are seeing short-term flows, but structural weaknesses remain. The FXI, the China ETF, struggling due to tariffs and supply chain restructuring and large government debt. However, this rotation is temporary. The reality is foreign capital is flooding into the U.S. to bypass these tariffs. While the media is focusing on these tariffs, they ignore the private sector stimulus effect. The simplest way to avoid tariffs, build in America. Japan, $1 trillion in LNG import commitments. Dubai and Saudi Arabia, $600 billion in direct U.S. investment. Taiwan Semiconductor, $100 billion in U.S. factory construction. Apple, $500 billion in redirected U.S. manufacturing. The Stargate project, $500 billion allocated for AI and data center infrastructure. And Eli Lilly, $50 billion invested in U.S. pharmaceutical production. Total private sector investment over $2 trillion. This dwarfs the estimated $250 billion in tariff costs by a factor of 8 to 1. While tariffs drive foreign capital into the U.S., Doge, Elon Musk's aggressive cost-cutting initiative, is eliminating government waste at an unprecedented scale. $65 billion has already been cut from bloated government programs. The CBO estimates $526 billion in appropriations for programs that have already been expired. GAO reports $320 billion in improper payments made annually to people that aren't even alive. Federal agencies are only using 12% of their office space. Massively inefficient. Why does this matter? Every dollar invested in government spending generates only $1 at best in GDP impact, a multiplier of 1 or less. Every $1 invested in private sectors generates $1.4 of GDP impact, a multiplier of 1.4. By shifting capital from inefficient public sector spending to high return private investments, Doge is unlocking hundreds of billions in productive capital that will accelerate economic growth. Without tariffs and Doge positive impacts, GDP growth slows to 1.5% in 2025. With the aforementioned impact of the positive benefits of tariffs and Doge, GDP accelerates to 4%. Historically, every 1% change in GDP leads to over a 6% change in S&P earnings. Applying that to our GDP outlook, we see, in the case of without tariffs and Doge benefits, GDP growth at 1.5%. S&P fair value, 5770. About where it is now. Scenario 2, with tariffs and Doge positive impacts, GDP growth over 4%, S&P 500 fair value of 7,500. This represents an upside of over 30% from today's closing price of 5682. The media is focused on short-term negatives, inflation, GDP contraction, and trade disruptions, but they fail to acknowledge the larger structural transformation happening before our very eyes. Tariffs are triggering a $2 trillion wave of foreign investment in the U.S. Doge is eliminating government waste and reallocating capital to the private sector. GDP growth is set to surge to 4%. The S&P 500 is poised for a 30% rally. This isn't economic destruction, it's a realignment of global capital flows. It's a structural shift towards efficiency, private sector growth, and economic self-reliance. This is the cold shower effect. Painful in the moment, but the key to long-term prosperity. Let the media sharpen their knives. The data is clear. The cold shower effect is setting the stage for the next U.S. economic boom, and those who recognize it early will be the biggest winners. Come to our website at singularresearch.com and get involved and take a look at our latest equity research recommendations to get fully positioned for this coming growth. I'm Robert Maltbie, Maltbie's Minute on the Market. Thank you.